if you understand how cash flow works and how cash on cash return works, you put yourself in a better position to be able to do well as a real estate investor. So today I've put down a pretty straightforward cash flow analysis. I'm assuming a 10-unit property. Cost of that 10-unit property is going to be $1 million. So we're looking at $100,000 per unit. Now you're going to go out and find a bank loan that's going to require you to put $200,000 down, which is 20% of your cost. And then you're going to get this bank loan for $800,000 or 80% of your cost. Now we're going to assume you're going to get a 4% interest rate, which is right here on the bank interest. And the way you get a 80% loan from a bank, pick up the phone or go in person and talk with a particular bank regarding your potential real estate purchase and the type of financing that you're looking for. If you don't have any luck with that route, the second way would be contact a commercial real estate loan broker. They search the whole entire country looking for the best real estate loans for their particular client. Now they don't work for free, so they will charge you, in some cases, 1% of your cost of the real estate. So in this case, that broker would charge you up to $10,000 in order to find you the very best financing package in the market. You're going to have $1,000 per month coming in on these 10 units, which equates to about $10K per month or $120K per year. Your expenses are going to be 50% of your gross rental income. And in this analysis right now, that's going to be $500 per month per unit. Because you're making $1,000 in rental income per unit, 50% of that is $500 per month, which equates to about $5,000 a month on the 10 units in expense, or $60,000 a year on the 10 units in expense. 50% is probably more than what your expenses are going to be. But for this analysis, I thought, why not be conservative and just take 50% as your expenses? So now let's move down to what I call OI, which is abbreviated for operating income. Now your operating income is going to be $120,000 per year. And where I get that from is your rental income, again, is $1,000 a month per unit. So that's $10,000 a month per month that you get for those 10 units. You times that by 12, you get $120,000 a year in gross rental income. So that's where your operating income comes from, minus your expenses, which is again $60,000, which leaves you an operating income of $60K. Now we go down to net operating income, NOI. So we know right now your operating income, once you subtract out your expenses from your gross income, is $60K. So you take that $60K, and then the next thing you want to do in order to come up with your net operating income is you now want to add in or subtract out the $32,000 for your interest from your bank loan. Now, how do I get the $32,000? What you simply do is your bank loan was for $800,000 times 4%, which is your interest rate from the bank loan, which gives you $32,000 in interest expense per year. There's the math on it. So I take that $32,000 and I need to subtract that from my operating income, which is $60K. which gives me a net operating income of $28,000. Now, the next thing I want to do, once I determine my net operating income of $28,000, is I want to now calculate what my cash on cash return is on this particular property. Now, the way I calculate cash on cash return, guys, is I define my cash in the deal is what I took out of my pocket and I actually put in the deal. I don't include what I borrowed from the bank. So the cash that I actually took out of my pocket to purchase this property was $200,000. So that's my cash in the deal. So I simply take my net operating income, which is $28,000, and I divide that by the amount of money I actually put into the deal, which is $200K, which is right here. So I take my $28K NOI, divide it by my $200,000 down payment, and it gives me a cash on cash return, annual cash on cash return of 14%. Now, some of you might say, well, I could probably do better than that in the stock market. Maybe you can. Maybe you can't. But this right here, in my opinion, is a safer investment as opposed to you going out trying to pick stocks, mutual funds, ETFs, index funds. You got $200,000 in the deal, you get a 14% return on your money. Now let's take it a step further. You're getting this $28,000. The whole objective, for me at least, is to get this $200,000 back in my pocket so that I can take it and put it in the next deal. So in this analysis right here, after 1 year, I'm going to start thinking about refinancing this property. And the reason I'm going to think about refinancing is because of a couple of things that I've done to the property. One, I've gotten my rental rates up to market, which is $1,000 per month per unit. Next thing is, maybe I've done some improvements to the property to help it go up a little bit in value. So in 12 to 18 months, I'm going to have a reputable appraiser come out and appraise my property. I'm going to sit down with that appraiser. I'm going to walk him through these numbers. I'm going to tell him all the things I've done to add value to the property. I'm going to talk with him about the other properties that are similar to mine in my area that I'm competing against, because obviously this is a 10-unit apartment complex right here. And then I'm going to get a value from that appraiser. And if that value is 20% higher than what I originally bought the property for, and in this case that would be $1.2 million as opposed to $1 million, then I'm going to go and look to refinance that loan and try and pull back as much of my $200,000 that I invested in the original loan, the original property. I'm going to try and pull as much as I can out of the property. Understanding cash flow and your cash on cash return, and also understanding that banks are in business to make loans, because that's, in most cases, that's the only way to make their money, then you'll win. Well guys, drop me some comments. Let me know what you think about the cash flow analysis on this 10-unit apartment complex. It was pretty simple, but I wanted to walk you guys through this because I've been getting a lot of questions asking me to do that. Well, if you're stopping by the channel for the first time, please consider subscribing, share the video, and give me a thumbs up. It helps the channel and it helps me too. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, and I'll catch you on the next video. Peace. If you want 2 free stocks, click on that link in the description box of the video, and Webull is going to give you 2 free stocks when you open a new Webull brokerage account. Deposit $5 in that brokerage account. They're going to give you 2 free stocks valued up to $2,300. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.